With Tesla stock passing $1,000 per share for the first time, the Tesla short sellers are in huge trouble, and when I say huge, I really mean it. In this video, we're going to take a look at the horrible mess that the most famous short sellers are in right now. If you're new to the channel, please consider subscribing for more content like this. With that being said, let's get right into it. This wouldn't be a Tesla short seller video without Gordon Johnson in it, who's most notorious for being the rudest Tesla short seller out of them all. Rumors are that he was fired from his job at Vertical Group because of how wrong he was on Tesla. He was also giving Vertical Group a bad reputation by constantly interrupting and raging on CNBC.
What about cash flow? If you don't make any cash flow, how do you stay? How do you remain as an ongoing entity if you're burning billions of dollars every quarter? How?
A question for you.
How do you
these
stay in
all
business if you're
questions,
burning
these
billions
all
of dollars
are
every quarter?
these all are irrelevant. The only thing that matters to the stock, how does that matter to the stock? Nothing. It has nothing to do with stock.
But it's not about stock price.
What matters for the stock is what matters for.
Gordon has recently made an appearance on Yahoo Finance attempting to back up three arguments. The competition is coming, Tesla has no secret sauce, and Tesla has a demand problem.
Point is, we've always said Tesla has a demand problem. You have a ton of new EVs hitting the market this year. We think Q2 is going to be a disaster, roughly $2.4 billion in cash flow burn. And we think this V-shape that people are expecting in the second half is not going to happen for Tesla. We think they're going to do about 311,000 cars in deliveries this year. We think it's going to be a big disappointment. And with respect to the technology, they do not have any special sauce. This is a viewpoint held by many reflected in Tesla's valuation. So keep in mind that last week they were pushing to deliver cars. So we think Tesla has a demand problem. We think they have a cash flow problem. And as that cash flow burns through this year, we think people are going to focus back on the fundamentals, and they're ugly.
Gordon has got to be one of the best comedians on Wall Street.
We'll see what happens this year, but when looking at the facts and not looking at an aspirational story, demand for their cars is collapsing in Europe, the USA, and China, as well as, pretty much every other locale. And you're going to see that in 1Q.
Where's the competition? Tesla is moving forward with its battery technology, while other automakers are struggling to compete with the 2012 Tesla Model S.
There is still, in 2019, no car that can compete with the Model S of 2012. It's 7 years later. Still waiting.
And how is there a demand problem when all the other dealerships are closed but Tesla is still selling? Jim Chanos is the most famous Tesla short seller because of the facts that he has lost the most money on Tesla. Despite shorting Tesla for over 5 years, Jim Chanos still won't admit that he was wrong about Tesla.
Generally, the results will always will out, right? Either the shorts or the longs are going to be right about something, and the stock will reflect that over time.
It almost seems as if Jim Chanos is only on CNBC when Tesla stock is down. Back in the beginning of April, Jim Chanos went on CNBC while Tesla stock was down from its highs and foolishly stated that he was still maximum short. In this interview, he was laughing at Tesla stock's parabolic move and called Tesla one of his favorite short positions. According to Jim, his viewpoint hasn't changed because Tesla is still a car company and will still lose money this year.
The other is when a stock goes parabolic, like Tesla did over the winter.
Who? We are still basically maximum short Tesla. It's still one of my favorite positions. Nothing's changed in my viewpoint here. This is a car company. It will lose money again this year. What I find fascinating about Tesla is that the 2021 estimates, which track the stock on the way up, are now being cut dramatically. I think Tony Sacconaghi, who you know, cut his 2021 adjusted EPS number yesterday from $18 to $11. I mean, that's not affected by the virus. So, I mean, we're seeing big number cuts in this company. They're building 2 plants. They finished China. They're building Berlin. They are increasing capacity, I think, exactly at the wrong time. And if you know anything about manufacturing economics, you know that units, you also need to cover your overhead if you're building more and more capacity. And if you're not producing at 90+% of capacity, you're basically not going to be profitable.
Mark Spiegel manages as much money as your grandma, but still gets plenty of media coverage because of how arrogant he is. He's most famous for the following clips.
So the name of this presentation is Tesla is still a zero.
Now, before we start, let's disclose each of you what your stakes are here financially. Mark, we'll start with you.
Yeah, so we're
shorted stock here.
Yeah, we're short Tesla via outright stock, and we own long-dated puts and some short-dated puts. And yeah, it's a seven-figure dollar amount of stock that we're short.
All right, and Galileo?
Yeah, so I'm a Tesla shareholder. I own 60 shares.
All right, good stuff. Okay, so we're going to break this into three parts. We're going to go through the financials, so by the numbers, then we're going to go into the technology, and then we'll go into, of course, Mr. Musk, Elon Musk himself. So let's start with the numbers themselves. Earnings were good, right? These past quarters, this past quarter has been really good. Losses were a little bit bigger than expected, but they did beat on revenue slightly here. $4 billion in revenue versus an expected 3.99, 16%. The stock soared. You did really well that day. Bears did not do very well that day. What was your reaction when you saw this report come out?
Well, I first have to ask about something you just said.
Yeah.
You said earnings were good. I mean, what I'm seeing here, this is the earnings. They had a GAAP loss of over $700 million. How is that possibly good?
I meant the revenue, so I meant the top line. Top line was good. Earnings came in way more losses than expected.
Right, so growing profitless revenue, in fact, growing money-losing revenue, is not a sustainable business.
With the recent rise of Nikola Motors, Mark Spiegel has recently been siding with Nikola, as he stated that the Tesla Semi is going to lose to Nikola's Semi. The funny thing about Mark is that he covered his short position in the 700s and 800s and then later rebought his short position when Tesla stock dropped to the 400s. Now, with Tesla stock reaching all-time highs, Mark is beefing with billionaire Ron Barron and his bullish view on Tesla by stating, "Keep thinking Tesla is special, Ron, you silly fanboy." With Mark's 7-figure amount shorting Tesla, it's no secret that he's losing at least 7 figures of his clients' money. In a recent letter sent to his shareholders, Mark admitted that he was not only shorting the stock, but also Tesla call options. His reasons for this was because Tesla has no moat, has a terrible balance sheet, and that Elon Musk is extremely untrustworthy. David Einhorn once had a net worth of $1.4 billion in March of 2018, but we saw that net worth drop to $700 million in a span of just 1 year. Now, we're still waiting for a recalculation of David Einhorn's net worth, but it'll certainly drop significantly after his horrible investments. From 2012 to 2015, David Einhorn was beating the S&P 500, but since then, it's clearly gone downhill for him. On March 31st, 2020, Einhorn filled a 13F filing showing that he had recently bought Tesla put options. Tesla stock was at $550 a share on March 31st, and now that it's at $1,000, it's safe to say that Einhorn is losing a boatload of money. He has also been a large investor in General Motors, which has been on the decline over the past 5 years. Einhorn is most famous for the following clip.
I'd like to remind everybody that the ideas I'm about to present are existing positions in our portfolio. We may change our positions at any time. Today, I'd like to talk about planes, trains, and automobiles. Let's start with automobiles. Napoleon once said, "Never interrupt your enemy when he's making a mistake." So I won't. Just watch the screen. That's a lot of horse shit.
Despite all these short sellers laughing at one point, it's becoming blatantly obvious that they should have cut their losses and admitted that they were wrong a long time ago. Now it's our turn to laugh back at them. Let me know what you think about these Tesla short sellers in the comment section below. If you enjoyed this video, please hit the like button and subscribe. With that being said, I'll see you in the next one.